Wednesday. Just firing things up on all ends. We are streaming on YouTube, LinkedIn, Twitter, X, Twitch, and now we're live in Zoom. All right, what's happening, everybody? Okay, good morning. Happy Wednesday. Welcome back. Daily profit plan. Another solid day yesterday. Markets are up a little bit this morning. That is a good sign. Possibly putting a bit of a short-term low as we head into the end of the quarter. Just on this little 5-day ceasefire, the market seems to like it. We'll see if there's some additional progress to take out the Monday surge that happened. We had that Monday morning news with Trump, 5-day ceasefire. Markets haven't broken the recent high from Monday, but we'll see if they do. So we will check that out. Let's say good morning to everybody. Chat's up and running on all platforms. So let's have a look. Okay. Import prices. Yep. News this morning. Morning, Pete. Morning, David. What's up, Jeff? Greg's in the house. What's up, Mac? Gerald and Andrew, Smith, Leslie. Good morning. What's happening, Paul? Okay. Morning, everybody. All right. Hey, Alan. How are you, man? Just a ceasefire on power generation, other targets. Yeah, I mean, I get that's why I'm saying price action matters. I mean, here is the big pop from Monday. So inside the structure, this was like the big surge on Monday, and we still haven't broken it. So I think if you're looking for any type of follow through, breaking this high, be a pretty simple measured move. Let's take a look at this from a fib perspective, just get a little context on the technicals. If we go from a low to high, we pulled back about 618, and that would project up to either 6770. We obviously have that near term resistance from the previous support break, or we could head up into 6850, which does kind of bring the bulls back into, I'd say, a decent level of control. So I'll keep that handy. Today, market's up a little bit. Futures, I'm showing 0.92%, which seems like a lot, doesn't it? I think why is because of this. Right after the close yesterday, it was an interesting price. So this happened right after the close yesterday. I saw that this was up and oil was down very, very sharply. If you joined me I had a little March Madness segment last week with Silas Peters and JD. I think what's JD's last name? Lagoshe. I hope I'm not butchering that, but anyway, we're doing like a March Madness thing. We're pairing up against each other, taking a trade, risking $1,000. And I needed oil to move. And because of that move yesterday, oil did exactly what I needed. I had 2 contracts running at 50 cents, ended up grabbing $1. So I took $1,000 position, turned it into $1,000. Pretty happy with that. And that was all after, because really I thought I was going to have a loss yesterday. So anyway, worked out well, but that's why you're showing, 0.92% higher. It's because of this surge right at the start of that fresh session. So there's 4 p.m. closing bell. There's 4 to 4:15. Market surge right there. We're up, and it's just kind of still maintaining that. Even the news this morning around 8:15, 8:30 didn't really derail this. But in the context of this Monday surge, we're still not quite there. So question I'm asking is, what's our expected move? How do we plan for the day? Are we going to be able to sell, some premium and stay out of the way? I'll probably do my levels, get my expected move box, get everything updated, take a good trade, and hopefully it's a good mechanical trade that works out. Let's see here. Big spike 1 minute before the market close. Yeah, no, I mean, I know it's something weird is happening, and whether it truly is that or not. Royal saying like insider trading. Look, it very well might be. I mean, who was the kind of SEC enforcer that was resigning? Somebody resigned because they were looking to probe into like the inside circle that Trump has. Look, it's going to raise a lot of eyebrows if this keeps happening from a market side. It's like it's going to raise a lot of eyebrows. But at the same time, it's like, what are you going to do about it? I mean, it's this spike. Okay, I mean, I'm sure that this is not the only insider example we've ever seen in market history. You know, it's just sad that it seems to happen at the most opportune time, or there's just news headlines that wrap around it and just automatically assume that it's Trump, whatever. Who cares? I mean, at least it's going up. That's certainly a better pump than, oh, it's down and then it whips back. And I mean, just let price be price. You can control what you can control. No, no, no. It was David. It was 1,000 into 1,000. I was risking 1,000 to make 1,000. It was a 1-to-1, but that's what we were given. Okay. Good stuff, Andy. Nice to have you, man. Moses, good morning. Recent news that there's no ceasefire. Very mixed. Yeah, I mean that was. We were kind of piecing that together on Monday. It's like Trump says there's talks. Iran says there's no talks. Who cares? But like I said, at the very least, market's going up. At the very least, even yesterday, market's going up. We're heading into some green on this morning. We take a look at our gamma levels. Okay. I mean, if we're getting above 65.90, let me get real gamma here. So we're getting some, better positive flows, which is encouraging. It's been a while since we've seen that actually. So looking at March 25th, um, I'm trying to find the pivot point here. I think as long as we're above 65.90, we are in positive gamma. So, pushing up towards 66.50, 66.65. I've got gamma levels up here towards, there's my 55 and 65, all the way up to maybe 6,700. I mean, I don't know, call me crazy, but it seems like maybe an easier day, and I don't know, of course, but an easier day would be to do some put spreads and just see if price will go higher. If we're going to get into positive gamma, stay into positive gamma, trying to, work its way back up to like 66.50, stay in the direction, that kind of path of least resistance and the upside, having the market kind of put in a bit of a bottom right here around 64.73 from Friday. But I want to see, you know, um, VIX wise, the VIX hasn't calmed down. We're at 25. So 25.50. I mean, this, we should be, I don't know, wildly thankful that the VIX this high, the markets are pretty quiet intraday. You know, I mean, this every single day, it's like when you have a 25 VIX, we're at 25.54. I mean, you could have a 1.6% move. That's a huge move, right? And we're talking yesterday. I mean, we had a plus minus, 70 points. 71 points was our plus minus on the day, and it opened lower, closed 15 points. So you have implied volatility at 71. And again, that's my pre-market movement, but that gives me kind of a safer level than going right at the open, because the open, it usually drops like 20 points. But this, I mean, the day only moved 15 to 16 points, and we're at a 25 VIX, you know? So it's just classic market maker stuff. Implied is greater than realized, expected is greater than actual. It's very helpful. It's helpful to know that. And I'm just trying to play safe and stay out of the way. I mean, obviously, if I knew the market was going to be plus or minus 15 points, I'd do an iron butterfly and have a full winner at the end of the day. But we don't know that because we're at a 25 VIX and the market could do all sorts of wild stuff. Venkat says, can you teach this? I just traded oil futures, CL. That's all. Oil futures. I just did I did a trade that I do a lot on pinch point. Just did a combo debit spread and it worked out. Okay. By the way, today, let's see, it's 9:30 a.m. Eastern time, 7:13 my time. I do have a hard stop today around 10:30 a.m. Eastern time. I will be heading to the airport and taking the little man to North Carolina today. So wish me luck. I will see you all tomorrow from Winston-Salem, North Carolina. And we'll see how solo dadnet will be. traveling. It's like a 4.5 hour flight, and then we're driving from Charlotte. So it could be a terrible idea, but it'll be fun. We'll make the best of it. We got the little dude a haircut last night. Um, I feel bad. He's had these like really amazing like curly locks, and I was just getting in his face and getting a little long. I literally said, "I'm like, just get out of his face, like out of his face, take his neck up a little bit," and they cut everything. I was like, "Oh no!" So his poor little locks are gone, and I mean he's still cute, but man, he's not getting all the crazy compliments. All right. Anywho, um, Knoxville Dan. Okay, good. Show us a new look. Yeah, you'll probably see him on Thursday. I mean, if he makes an appearance. So we'll be in a new time zone. We'll see how well he sleeps. I'll still hang out with him in the mornings. He might make an appearance. I'll have some noise canceling headphones. So we'll make the best of it. But we can obviously jump in and grind out a trade together on Thursday and Friday. So I know it will, but those baby locks and those baby curls might not grow back the same way. We'll see. I still have like little curly hair, little wavy hair, but whatever. All right. So for this morning, let's do our thing. And let's jump in to get our pre-market. Give me some thinker swims. Give me some tasties. What are we seeing? I'll log into my broker platform here. I'm going to sign out, sign back in. I've been playing around with some AI stuff, so I've left my computer on last couple nights. 72.90 tasty trade. Gosh, it seems so high again. Okay. 51 on thinkorswim. Okay, 50.5, 50.5. Okay. All right, I'm taking the higher of the two, 72.9. Sheesh. Thanks. All right, so we'll go 72.90 on the expected move box. 72.90. $72.90. We'll go back down to the 1-minute chart. So this starts to print the box right away. And we should be gapping higher with futures, 0.8%. I'll kind of ballpark this right now. There's the close up about 0.8% right there. And then take the 72.9 on top of that. So we're looking at around 66.80 roughly expected move. Then take the previous day's close, go down to 72.9. Looking around 64.83. So that's ballpark. Okay, we'll obviously have the box will tell us exactly where we want to be, but these are my two, guesstimated values right now based on the current futures price. Okay, so looking at gamma, we do have a 6,700 level. So what I'd probably look at doing is either selling call spreads above 67 or putting a butterfly trap up in this area. Even if it was I'm willing to pay for that one, like a 5 debit, 10 debit, right? Like $5 or $10. See if we can trap this thing around 67. I mean, we should see safety above like 66.85 as far as this, calculated move. Because again, I'm taking the gap adjusted plus the expected move. If the VIX is going to go down, which we don't know, but if VIX goes down today, then S&P probably goes up. Right? So we'll keep an eye on that this morning. Have a look elsewhere. Oil. Go to a bigger time frame here. I mean, what's nuts is looking at a daily chart almost gives us like no context. This is just because it moves so far, so fast, and kind of spiked up 100 and some percent, crashed down. I almost have to go to this 4-hour chart to get a better picture of what the market's doing. I am trading oil this way. Since we had this pullback here, I do have a broken wing butterfly. I shared that with you yesterday. And as long as price stays above 75, this is a 45 days expiration trade. If we go low to high, higher low to higher high. I could see that playing out very similar to what gold did. After gold hit its huge high, it went all the way down and spiked aggressively to the downside, right? And then we have a Gartley pattern, which is X, A, B, C to D, and then also put in the top on gold. And then we came down to hit that 200-day moving average. Gold is back up on this. You can call it ceasefire, whatever you want to call it, but gold's made a decent pivot off the lows. So we called symmetry down here. That's what this yellow box was for. This is pretty good trading, right? High, low, lower, low. Symmetry was right here on 42.22. And, same day, you had that wick right through it, hit the 200-day moving average, and has bounced up. So even from my symmetry calculation, that's why I was so adamant about trying to find some trades on gold. It's up almost 8%, 7.94%. That's not a bad jump off of symmetry. It's a little bit better off the lows, but it's hard to get the exact bottom, obviously. But anyway, mission accomplished on gold, getting a pullback. Now we see what this is made of. Do we go all the way back to all-time highs? I don't know. I'm not holding gold thinking we're going to all-time highs immediately, but I'm holding gold thinking that it's a good trade. And it was better than buying over here when it was going up. So we got ourselves a nice little discount. I think it was around 25% pullback. There's a 27% pullback on gold. Silver came back down to equal lows. Another pretty good discount. This one I think pulled back 30+%. 47%, up to almost 50% pullback on silver. Wow. But love the positioning. Seriously. I mean, Project Options Edge, we have plenty of trades in around like the 50 handle, 45 handle, some naked puts, some ratio spreads. I'm liking those. And then I just also added into SLV. Okay. Let's see here. Thinkorswim, Thinkorswim, Thinkorswim. Third day without Thinkorswim. That's odd. What is that? Post upgrade at the weekend, clean cash. Oh, thanks, Pete. All right, what's happening with data storage? Is that Western Digital, Micron? I don't know. Western Digital. Pre-market, they're down a little bit. I just think that some of the good was priced in. That's all. I mean, did you think that Western Digital, is this like the little company that makes, little external hard drives? I know it's more than that, but that's like what I know them for. I mean, year to date, they're up 70%. I mean, what tends to happen in a rotation is people will sell their good to cover their bad. That's not necessarily the right way to do it, but that's what happens. I mean, that's why gold probably had that accelerated move to the downside to hit that 200-day moving average. Same thing with silver. Stocks like this are probably subject to some rotation. I mean, good profits are made. Is this stock worth this much money? I don't know. Was it, I mean, how many stocks ripped 70% this year? Not very many. Not with this dispersion trade. So I just think there's some profit taking, or there's probably collar trades in this thing, right? Sell some calls, suppress volatility, buy some puts in case it goes down. I mean, even if it just pulls back to a moving average cluster, it's possibly still a buy, but after it ran 70%, it's going to pull back. I just think things just don't keep going up forever. Plus, I'm showing overbought conditions with divergence at the top. Okay, I'm going to click on that link, Don. Interesting. All right, I'll post it again. Here's the video. That is weird. All right, I'm just going to go to my Vimeo page. So I'll pull it directly from my Vimeo library. It should work. I don't know why it does that. Let's go one, trade mastery. So here's the video. Manage. I'm going to go in and grab the direct play link right here. So play the video, copy. Here it is. One, trade mastery. Okay, that video should work. If I click on that link that I just posted, so let me know if that works. Okay, pinch point. Said I want to showcase a little pinch point today. Pinch point scanner. Of all the stocks we have available, we have 31 in the go zone. Some of these, I think we have 3 or 4 that are in the S&P. Intel and Pfizer in the S&P. Love it. I'm long Pfizer already. Put in a broken wing butterfly for pinch point members on Intel. Um, we do have the overlap with Intel. We have all stocks. I want to take a look at these for the rest of the week. I don't have to price these all out today, but this is the plan: is going through and trying to find some of these trades. Okay, so we have 31 really good looking opportunities. Technically, what I will do is start finding out which ones trade, which ones match criteria for a good trade. I'm checking to see what is the expected move. I'm checking to see how options are priced. What are the strikes? Are they precise enough to take $1 spreads, 250 spreads, $5 spreads? What's the expirations? We have weekly expirations, monthly expirations. So I go through every ticker and figure out if those trades are worth throwing some dollars at it. I mean, they've been working out so far. We're winning 85% of our trades with pinch point scanner. Take the trade, set the take profit. It's been a very easy process. But part of the trading process is to have pinch point find us great trades, go through the option chain, and just spend time building the trade. Right? Some trades, if they have monthly options, I'm not that excited about monthly options. Less precision. Right? I'm also wanting to see like volume and liquidity. I want to see open interest. I want to see, what is the bid mid ask on some of these trades. So some of these is like, well, I've never heard of it. It has no open interest. I'm not going to trade it. We've made a lot of winners with those trades. The difference is if you're trading, liquidity like S&P liquidity, Intel and Pfizer are going to have millions and millions and millions of shares, right? 65 million, 35 million. You can get in and out for a penny on those options, which is good. But the other stocks might be a little bit tougher to do that. However, it doesn't mean they don't move. All of these stocks technically are due to move. So if I can get a trade, get a fill, and we have some direction, most likely we're still going to hit a profit target. Will you please add a beta filter? I can beta filter. I was going to also add a search bar. No promises on the timeline, but I can deliver these to the team. So search for the actual name. Okay, noted. Can you add one trade mastery link to the programs, one click trading? Yes, Dion, I can send you that link. We can add that into like my practical options, kind of bonus courses, foundational stuff. I'll give that to Deanna. Yeah, we can do that. Price column. Yeah, you could you can click on inspect and get the price. But unless you want to get like a real time read, like right now, these popped up. It's obviously not opening bell, so I don't have a price yet, but it could be like previous day's close. If you want this to be real time, I'm sure we can get this updated within 1 or 2 minutes, right? If we want to add a price column. So again, don't make me Frankenstein this thing, right? Like if I add something, I want it to have a purpose that helps us with the strategy. I'm not just going to build out this master crazy dashboard that like because you've got 10 requests on it that really have nothing to do with what is my pinch point trade. You know, is a beta filter going to help you trade better? I mean, most stocks are higher beta than the S&P. So anyway, I'll just like I said, take some notes. I'll put in a wish list. We'll see how quickly the dev team can get on it. Okay. Pfizer had some mini takeovers. Yeah, great. I love it because I've been long Pfizer for a while. Part of it is I've been long Pfizer. Really since this like 25-50 low, since the COVID low. I thought, if I get long at COVID lows, I should have a pretty good chance of prices going higher. So I've sold lots of covered calls. My cost base is down to the low 20s. I'm pretty happy letting Pfizer go around like $30 to $34. Even from this I just drew a fib from this high to this low. Even if we pull back like 30 to 38%, that's a $31 to $34 target. I'm not looking to hold Pfizer forever. Do I think that the days of Pfizer getting to 50, $60 are near? Not really. It's probably going to take years to do that, but ultimately I think it's a company that'll make a lot of money and have reliable dividend. But if Trump comes for pharma, and I don't know. I mean, it's been dead money for a while. It's like you've had stocks being high flying and biotech's been high flying and pharma, but this year, like healthcare's getting hit pretty hard, insurance companies getting hit pretty hard, and Pfizer's this little boring, 6% dividend stock that the reason I bought fairly aggressively is because I didn't think there was too much more downside to it. So even if I just put, 1,000 shares in it, wrapped up a little bit of capital, but I'm turning 6% profit on that, it's like that's okay. And I think that the price appreciation is a reasonable probability. So anyway, that is all. All right, let's go back here. Opening bell. Let's get after it. JOBY. We can take a look at it in a second. Now the expected move has gone down to 44 today. So we went from a 72.90 to a 44. Thinkorswim's probably, a little bit closer to that, like 50 to 55. If you're looking at that as kind of selling high, I'm probably going to go pretty safe. Okay. So expected high, again, gap adjusted, right? We've had a decent gap up, futures up 0.9%. So we opened up a little bit higher right here on SPX. So a little bit higher open. Take that plus minus. Okay. So gap adjusted 66.90. And gap adjusted down here is 6463. So 64.90. I guess 66.89. And 64.83. Okay, so that's way out of the way. Let's see what like the 6700 handle looks like for some credit today. 6700 is not terrible. It's still low delta, right? Still low delta. I wouldn't mind taking. I mean, if price is going to go higher, I think we could probably push into this and get filled for $1 or better. I would want to have some defense on there if I could. To see if I go 67, 15 wide. Where did we open this morning? We opened around 66.15. Okay. So if I go 15 wide for $1.10, I would put some defense on there. Let me see if I can get this filled for $1.10. So, and again, I'm taking a decent amount of risk here. This is not great risk management. I do think the probability of profit is pretty high, but I'm going to play some defense and try to pin this thing around that 67.10 to cover my butt. Okay, so let's see if I can get $1.10 credit on this. I'm going 15 wide, 2 bear call spreads, and I'll add in some put spreads as well to pull in some more premium. But I'm going to try to get filled on the call side first. See if I get $1.05, $1.10. Okay, trading for $1.10, $1.05 mid. $1.10 not filling, $1.05. Come on, don't do that. Okay, I'll let that hang out for $1. Let me just reprice this for a second. If I go 15 wide, 67 here, that's a 7 delta. Let me match that. 7 delta, 15 wide. That's $1.10, $1.50. I'm going to take a couple of these spreads. So I'm going to go $1.10 on a daily profit play. $1.15, 15 wide. Okay, just got filled for $1.10. Let's put this in. So this is 6,700, 15 wide. It's coming in for members. So new trade, SPX, 325. It's $1.10 credit. Okay, if I went another 15 wide, and I'll play defense with looks like a 15 wide butterfly spread. I'll try to get filled for those low debits. I'm going to go, this is a slightly lower delta. I'll go 15 wide here. There's another dollar. So you get this filled for $1. Okay, I'll let that hang out for $1. So that's a 67.05, 67.20, 65.15, 6,500. Okay, I'll let that fill for $1, hopefully. And then I'll put in some defense. So I'll go defense here, not overlapping. So I can go 95 to 10. And then that would be 15. See if this can be a little bit cheaper. All right, we'll see if this one could get filled for 10 cents. I'll go 15 cents debit here. No, 10 cents is fine. I'll let this hang out. And defense, let's go 30 by 10. So I'll go 20 wide on the put side. That is 20, puts me down to 64.90. All right, see if I can get this one filled for 10 cents debit. All right, so adding some defense. Adding top and bottom defense. I'm putting this in Telegram for daily profit play. This is SPX. All right, I got filled for $1 on that second 15 wide. So I've got $1.10, $1.10, 15 wide, $1, 15 wide, 2 daily profit plays filling. The strikes, 6,700. 6,700, 6,705, both 15 wide. Put side just got filled for 10 cents. So I got some defense going as well. I'll see if I can get some defense up here. Hopefully it's not going to be terribly expensive, but I'll play around with this for a second. All right, let me get this added in. So this is the top defense. 325. Okay, bottom defense got filled pretty quickly. That's 20 wide, by the way. So 65, 30, 65, 10, and 64, 80. 10 cents debit filled. All right, so right now, call side defense is trading for about 30 cents. Total, I have $2.10 to play with. Okay, so I'm trying not to take off a ton of that premium. So $210 to play with, minus 10. And now I'm trying to figure out what I can get on the call side. You know, I could obviously sacrifice 25 to 30 cents right now to get this thing filled for a debit. That's fine. and I'd still make 100 and, 180 bucks on the day, 175 bucks on the day, which is fine. I'd have a profit trap around that 65.05, 67.05, 67.10 would be a decent profit trap. I don't mind sacrificing this, especially since I'm traveling. I do want to have, some defense in around that 6700 handle. Let me see if I can get this thing filled for 15 cents would be solid, I guess, or even 20 cents is okay. I'll try 20 cents. It's not going to fill right now, but I'm just going to let that marinate for 20 cents, see if that fills. Um, Actually, you know what? If this just stalls. So my strikes 65, 65.20, 65.15. Okay, 65.20. And then all the way up here, I did the 6,700. Okay, so as long as price is below this green line, above this green line, that's looking good for daily profit play on the day. Let's see if this call side will fill. I'm going to try to get filled for 15 cents, so I'm just sacrificing a little bit less. So that'd be 210, 210 minus the 10-cent debit, minus a 15-cent debit. So I'd have 185 in the day. That'd be the plan. I'd have profit traps, around that 6,700 handle and down to about 6,500 as well. Feel like that's a pretty good plan going into the day. Bear calls filled. Yes. The whole daily profit play filled. I have 2 daily profit plays filling. Yep. So I have 2 of them filling. That was a $1.10 and a dollar credit. So the bear call spreads I didn't get filled because I canceled that when I put on the iron condors. So I just have 2 iron condors, one for $1.10, one for $1. I'm putting in some defense and I'm trying to play around with that call side defense right now. If I look at a put spread here, let's go 20 wide. Like that cost me $1. So it's obviously more expensive to do the standard butterfly. I mean, see how much that fluctuates? Like 40 cents debit, 90 cents debit, 65 cents debit. Like that's way more expensive than I want it to be. That's why I'm trying to build that broken wing structure. So 66.95 by 67.10, that gives me a $1,500 profit trap with a little bit of defense. Okay. This one is cheaper, about 25 cents right now. I'd like it to be cheaper if possible. I'd like it to be cheaper. I could possibly, this is a maybe, but let me go 90 to 67.05. That'd be 15 wide right there. I mean, that's still 25 cents. It's like there's not really a good way to get this thing to pay me credit, which is annoying. Even for a broken wing, it's like I love credit on a broken wing, but it's just not giving it to me. So I'm probably gonna have to take a small debit, and that's why I'm putting it in pending at like 15 cents right now. Okay. Carlene says every morning I do the same trade on Thinkorswim. Never get close to the dollar on the spreads. Always at 50 cents. I mean, you look. Look at the same trade. If I went 6,700, 67.15, and let's go 20 by where was it? 20 by '05. That trade is still offering $1. What are you talking about? I mean, it's still offering almost the exact same price that I got. It's $1.05, $1.10. So I'm 15 wide. I'm 15 wide. It's a iron condor. I'm seeing $1.05 mid, dollar fill. If you're only seeing 55 to 60 cents, I don't know how or why, unless you're going narrower on your spread, right? That's only offering 40 cents, but I went 15 wide, so it's a little bit wider, right? Which is obviously bringing in more risk for me. I acknowledge that, but I can still see that trade offering like $1, $1.05. I don't know. That's weird. I mean, I'm happy to tell you. Like, just send me an email. Send me an email. Send me your screenshot. Like, Tell me if you put in the strikes the correct way, expiration strikes, and the width, it should be offering $1. $5, $10 should be filled on the same trade that I took this morning. And it's still available. Now it's $1.10, $1.15. So if the difference is width, I mean that's what I'm thinking is either the width or one of them you're not putting in as a credit spread. One of them might be a debit spread. I would just say double check. That's all. Send me a screenshot. I want to see it. I can't just talk blindly and assume that something is wrong. It's like, show me. A lot of times when people send me screenshots, I can diagnose like what it is. It's not that we don't. I haven't been because I've been using the expected move box and trying to play it a little bit safer. So it's this is a dynamic strategy. I'm trying to go after can I make $100 a day and how do I do it the safest way I know possible? I'm doing it with a little bit wider spreads and I'm playing defense, which is different than just setting a 5 wide hoping to get filled for $1. Because how many trades do we take? Also, the 5 wide spread for $1 is great. But the 5 wide spread that sits at 60 cents, 60 cents, 60 cents, 70 cents all day and doesn't get filled, I'm not saying it's a wasted opportunity, but I don't like not winning. When the day is efficient, I'd like to make some money, right? And sometimes those 5 wides don't fill for $1 and it just sits all day and doesn't get filled. And I don't love those days, even though the risk is tight. And by default, that is still like my favorite standard strategy. You just have to be patient to accept that some days won't fill. Yep. Okay. All right. Yeah, Carlene, I'm telling you, send me an email, chrispulverpub@gmail.com. Send me a screenshot, use your snipping tool, take a picture of it, whatever. Send me a screenshot. Let me see what you're doing in Thinkorswim. Hopefully I can help. Okay, delta-wise, we're still at a 5 delta on the top side. We're at a 7 or 8 delta on the put side. Market might be coming back to recenter a little bit. Yep. So I just need to see if price will stay above. Are we in positive gamma right now? Yes, we are. This is good. Like so far, this day looks pretty solid. Above 65.90 is an encouraging sign to stay there. Obviously, I'd like to see price hold this gap from yesterday's close to today, and we'll see if we're just going to kind of stay out. If we stay in the zone, this is perfect. We stay in this area, that's great. This market can fluctuate, almost 60 points, and we're still safe. Very safe, actually. So, we'll see what the day gives us. I'm just looking again, like reading the tape on futures. I just want to see some price action to make sure we're not going to get fooled by like the market's trying to come up and test that Monday spike. It's nowhere close. Does that ever see what I'm saying? Like if we have this low and this high and the market is trying to come up here and, test this level, there could be a liquidity sweep and then it just falls back down. But if we're just going to chop around in here, I'm just trying to stay out of the way. Right? So if it's just a, pretty chill day, then we'll make some money. All right, which also should be my call side defense might be getting a little bit cheaper here, which is good. Because I don't mind it getting filled for 15 cents. That would be of the 210 credit that I pulled in. So 210 credit minus 10, minus 15. I'm still making $185 on the day. I've got defense on the top and bottom that I'm okay with. Okay, what do you have there? Royal, no confirmed date or venue for possible U.S.-Iran talks. Yeah, I mean, I get it. It doesn't mean the market's going to take it as bad news, I mean, again, you can put every headline, every attachment you want to it, but the bottom line is price will tell us. If price thinks there's bad things coming, it shows up in price. If it thinks there's good things coming, it shows up in price. Like, I mean, they've always given the market a lot of credit for being forward thinking, 6 to 8 months forward thinking. So, I mean, if the market was trying to price in bad stuff, I mean, maybe some of it is, maybe some of it isn't. I don't think that it is. I think that the market, still has a potential like 10% pullback in its cards for the year, but I think that the Trump put is like he does not want to see the market pull back more than 10%. And again, like the fact that I'm even giving, there we go, we got filled on the call side for 15 cents. All right, so I got defense filled. All right, so 15 cents pending, that's filled. So trades are in. So I've got top and bottom defense, 2 daily profit play trades on, and I need price for the day to stay below 67 and above 65.20. If price can do that for me on the day, it's going to be a good day. If price is going to test those levels, we've got profit trap sitting there to help us out. Mark says, what's the advantage of the iron condor versus the double bear call spread? Well, the double bear call spread, let's say that price, let's say you get filled up here, right? What do you need to have happen on a bear call spread? You need price to stay below that line. So that's your preference, great. But right now, the skew in the market is giving us a little bit higher premium on the puts. So doing a iron condor is, bear call spread, bull put spread, and now I can trade it both directions. And I'm not saying one is better than the other. I mean, to me, it's all about like, what's my safest level? Can I make profit today? I mean, initially, I thought if the market gaps higher and I sell bear call spreads, I think that's a pretty safe trade. Right now, if I did the same trades, bear call spread wise, because markets have seen a little bit of a decline already, I'm probably going to get less premium for that. Okay, so I am curious. I mean, look at this thing. This is falling pretty hard. I mean, we've dropped 30 to 35 points in the last like 20 minutes. Well, no, this is a 1 minute chart. Never mind. And the last 10 minutes, I guess. Okay, oil price is going up. Put side not filled. Is the VIX going higher? A little bit. VIX is going up a little bit. Let me put. There's a 28 VIX in case we're breaking. I'm just going to get some notes here. Like here's a 30 VIX. Just set some chart alarms and just kind of get a feel for where we're going for the day. We've seen a lot of chop in the VIX the last couple of days. We saw a lot of chop last week in the VIX as well. This was all on. This was Friday, so the VIX was going up into the close, and then we had that huge reversal late on Friday where we were down to like 64.73 and the market ripped up to 65.10. The VIX had that big smash at the end of the day. Then it gapped higher and smashed hard from Sunday to Monday on that little Trump tweet. But right now it looks like the VIX is trying to go up. Doesn't mean it's going to keep rallying to 28 or so, but I want to keep an eye on that to see what the price is doing overall. Okay. I'm going to recenter this thing from yesterday's close around 65.57. Okay. So we had the low from last week at 73. That's Friday. We have the gap around 65.07. Again, it's going to be important today to see if price can hold this. I mean, if we hold 65.90, that at least shows that positive gamma is here, right? If the market pulls back and finds this support and goes back up, then we've already had a decent little kind of balance on the day. Let me see. Could I pull in some like 64.70 premium since it's way down there? So 64.70. Could probably get something in there. 64.70. I mean, I'm not taking that trade. Let me see if I can throw another butterfly in. I'll put another butterfly in on the put side for a credit, not a debit. But it may also not offer any defense. But I'm trying to get something pinned maybe between like the 65 and 64.75. See if I can wiggle something in here. So if I buy the 25, 95, that's 30 wide to 40 wide. Most likely not going to give me what I want. So 25, that's 15 wide. Yeah, I'm going to try to set this a little bit lower. Hang on. So I can buy, sell, that's 15. We can maybe nab a 20. Okay, let me see if this will fill for a dollar credit. All right, so that would be 20 wide for $1,000 profit trap around 64. Actually, a $2,000 profit trap around 64.85. Pending, it's unlikely going to get filled unless price gets a little iffy to the downside. Okay, chase the put defense. Not necessarily chase. No, I mean those broken wing butterflies that I put on usually in the debit side. I don't like to pay more than about 20 cents, 25 cents. If I'm going to do a debit, 20 to 25 cents is about it. Right? Because remember, there's still risk on the far side of the trade. If I'm wrong in that defense trade, I still have risk. And if I'm paying a debit, it's just added risk. Not a bunch, obviously. But the whole point is that's a profit trap that should be big enough where probability wise, we shouldn't see prices, um, you know, going beyond that level. So just take a look at the VIX box here. VIX box around 64.50. Previous lows from last week around 75. Again, gap, 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 all sorts of stuff. What am I looking for today? I mean, prices sold off a little bit this morning. That's fine. The day is obviously not done. If the markets, there's two levels I'd be watching. If we hit 65.90 and we bounce, that's showing that this pivot between the positive negative gamma flows. It shows that the market's still interested in selling puts, selling calls, and it just stays contained for the day. What we don't really want to see is price getting lower and filling this gap because all of a sudden we flip from positive gamma to negative gamma, which means sell calls, buy puts, which tends to be higher volatility days. Okay. So I think as long as, and I mean, price action wise today, we opened here. We've already had a push up about 17 points. We've fallen about 23 points. I mean, it seems like the market's responding around this like positive negative gamma handle around 65.90. So if price can make its way back, back up a little bit, that's encouraging. And we'll probably just see the market, maybe make a higher high, maybe make a lower low. But, for what we need it to do, stay above this line, stay below this line. Okay. All right. Take a look at VIX again. VIX is up a little bit. As long as the VIX isn't cracking these alarms to the upside, we won't see a lot of downside pressure if the VIX is going to stay probably sub 26. I would think it's going to be pretty contained. But if the VIX is up to 27, 27.50, 28, we're probably getting some back. Oh my God. Who was in the roundtable or the profit panel with me yesterday? This is crazy, dude. VCX. Okay, I bought some shares of this yesterday. This is insane. I bought this yesterday at like $300. It's already up almost 100%. I'm up $6,000 today. Wow, that is insane. I mean, I literally bought like $500 worth yesterday, $600 worth. So we talked about this in profit panel. I literally talked to a friend of mine over the weekend about this, and I looked at it, Sunday night, and I was curious what it did yesterday. This is insane. I mean, this is a daily time frame. It's like you have nothing really to go on here, but I mean, it's already up 1,000%. There's a 1,500%. I mean, I don't even know. Do I put a take profit at like 1,000? Just get out of this thing? I'm going to. I just like this is crazy to me. I'm gonna set some take profits here at $1,000, like 995. That'd be a pretty good win. So let me just do that. Set these for closing orders. I'll go 995. That would pull in. I mean, that's taking a $600 position, turn it into $2,000. That's not bad. Crazy. So pending orders, close. I'll tell Alex and Jeff about this. We talked about it yesterday. I think Alex took a position with me, but I put a little bit in for everybody. So essentially, if you're wondering what it is, it's it's basically a public way to seed small cap AI companies. So and to me, here's my opinion in the next 10 years. There will be companies out there that are extremely profitable that never go public. And the irony is that right now private equity is under scrutiny and under in a bunch of trouble, right? Blue Owl might go to zero, blah blah blah. But there will be companies that have, maybe 5 to 10 employees that have hundreds of agents working for them that are doing something in tech, something in AI, something somewhere and making, I don't know, $10 million a year with 5 employees, $50 million a year with 5 employees. It's like that's the type of stuff that this might offer. Like the 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 innovation we have on the horizon it's a game changer, but it's very disruptive for what is the current S&P 500 that is, quarterly earnings, super high scrutiny, order flows. Like you just have to have like that they call it the mindless robot, which is just like 401ks, pension plans, forced buying. Um, if you just have everything, it's like we don't need to raise capital. We don't want to go public. We don't need to. That's what I think. So it's not now. It's not immediate, but this stuff is kind of nuts. When anyway, that's what this company is. It's essentially finding those little companies that really have no intention of going public, um, but it's a big deal. So we'll see. It could be a very lucky. I mean, hell, if this thing hits $1,000 in the next week or two, it's like I'm out. I might never look back. I might take the whole position off and never touch it again. Um, or I don't know. I mean, it's hard to know, right? Is it going to be worth thousands and thousands of dollars? I don't know, but we're about to find out. Question asks, why is DPP trade going up when SPX is falling? I'm not sure what you're saying. I mean, because there was more volatility. I mean, if you traded it with me, we did a trade here, and we want price to basically go nowhere. So if there's a bit more direction, this side gets threatened a little bit. This side is in profit. It's the seesaw of how this price is going to move. So price is moving fast one way or the other. Your put side, whatever price is pushing directionally, will kind of get threatened for a second, and we'll see if it stabilizes. Yeah, I know. I know, Pete. So it's kind of like a mini IPO, like Anthropic and OpenAI and SpaceX. If those go public, I mean, it's kind of a big deal for the IPO space in 2026. I also think that's a huge bag holder. If you're trying to trade SpaceX IPO or you're trying to trade an Anthropic IPO, um, I would give that stock like 3 to 6 months after IPO before it basically is the top of the market. Between capex spending and those type of IPOs that come to market, look, all of the limited partners that have been in the private equity space to get made whole on those things, they are going to cash out so fast. So I'm just very skeptical on like how far this can sustain. But yeah, Anthropic is 20% of that. Yep. And Dury, OpenAI, Databricks, yeah, they've got a stake in a lot of stuff. So that's why I did it. I mean, that was this conversation I had with my friend over the weekend. It seems promising. Extreme volatility halted. Crazy. Well, the good thing is that halt is probably going to lead to more upside. Halting on an upside move just means there's more and more like there's going to be so much volume driving this thing. Gosh, am I going to kick myself if I close it out at 1,000 and it just runs even hotter? Hard part's going to be getting out of this thing. So what was the halt today from percentage perspective? It was up 70. It was sheesh. The crazy thing is like the law of large numbers. If we go from here another 70% higher, that is up to 9 inch. That's over $900 tomorrow, right? If they decide to halt it again, I don't know. $1,000 could be a pretty good target. I have no idea. It is probably lucky. It's probably one of those situations where it's better lucky than good type thing. Um, and if there's liquidity to get out of it, I'd love to just close out my positions. I'd also like to just take the house money and let it ride, right? Like get my initial principal back, which is 600 bucks, let the rest ride. And that way there's no risk in the trade. But I'll also kick myself. If we go to 1,000 and then we drop back down to 100. So I think I'll just take the money basically from $300. So I got in for 313 bucks yesterday. I close out at 995. I mean, every account that I have, and that's making 20 grand in like whatever, a week. That's not bad. So we'll see what happens. But I'm just gonna set the targets at 995. It's it's good enough. I could walk away somewhat happy. I'll kick myself later. But I think that's a smart, prudent thing to do versus, going for a home run that maybe has no business being one. Yep. Yeah, I was gonna say if I close out half and take the house money, that's fine. I have no idea what this thing's gonna do. I mean, the fact that it started like 25 bucks and now it's 500. I mean, is it going into the thousands? Are we gonna see like a? I mean, are we gonna see a $5,000 or $10,000 stock price? It's like that's not how stocks work, you know. So I'm just gonna take the 995 and get out of it. All right. So I've got. I'm just gonna keep going through these with closing orders. So close 995. Okay, so let me work through this and we'll talk pinch point for a little bit. I've got about 24 minutes where I have to go. All the fun stuff. I feel like Tasty needs to improve their shape variety. It looks like I'm just putting the same orders into multiple accounts when they're supposed to be different shapes, dots, colors. Make sure these are all at 995. Okay. So pending orders are closed. And then if that gets triggered for a close, then I will take away. I had a pending order at 55 bucks when we talked about it yesterday. So no WF class today. WF is in what, Stephanie? Waterfall? I mean, that's Mondays. We did that live on Monday at 11:30. Now we get $1 credit on the put side of the credit spread. Sure. I mean, price is kind of hanging out. I mean, put side. I mean, look at the center price when we opened at 66.16, and we've fallen about 20 points or so. So I mean, yeah, the put side is going to be worth a little bit more. No, it's Monday mornings. Monday's 11:30. Yep. So all right, let me give you a little sneak peek here. This is what I plan on doing. I've got screenshots of this. Obviously, I can pull up the pinch point anytime for my scanner. These are the stocks that are in the go zone. I already have a live trade on Intel. Pfizer, truthfully on Pfizer, I mean, you can obviously do the breakout. The expected move is going to be pretty minimal. I think if we just did like a broken wing butterfly or even if you got the cash for it, even like a naked put on Pfizer would be okay. Um, I again, like I don't think we need to turn Pfizer into a losing trade at all. So case in point would be if I looked at Pfizer, and we're getting a pinch. Pfizer. Okay, so we have earnings on the 5th. If usually I like to go out, especially with pinch point. I mean, I like to go out to look at an earnings catalyst, go out maybe 45 to 60 days. We have a 51-day expiration in May. That's about 10 days after earnings. I'm going to go to the June one just to get this thing out of the way. That's enough time that let me see if I can build out like either a broken wing butterfly or even a ratio spread because I wouldn't mind owning the shares. I just want to see if I can make it worth my time. So 26 by 25, 27 by 26. Like, I mean, if there's upside direction, this isn't a bad trade. Let me see something here. What I'm saying is, is anybody like uncomfortable taking a trade that has like maximum like $2,600? It's not the risk because I don't think that Pfizer's going to zero, right? What I'm saying is if we go, let's say 28 by 26, okay? I'd be willing to own the shares. I'd be willing to own the shares at $26 minus 2 puts me down to $24. That's a pretty good ownership price on Pfizer. Okay, so if we went down to $24 here, would I own shares at 24? Yes. Would I sit and own them with a 6+% dividend with a low beta stock that likely goes higher? Yes. If it goes nowhere, I would actually have a $200 profit trap right here. If it goes up, then I don't really make any money. I make 5 cents. So there's probably a better structure. Let me go 26 or 28, 27, and 25. Play around with this for a second. So that's 18 cents credit with a profit trap. That's 50. I mean, this is a pretty good trade. I give myself a dollar profit trap. Dollar profit trap. There's no upside risk. We get $50. Would I be risking 450? Not really, because I'd be happy to own the shares under 26. Which if because of this setup, I'd own the shares. It'd be $1.50 lower, so 26 minus $1.50. I'd own the shares at 24.49. I'll repair it. Okay, let me just take the trade. This is what I'm going to do. If we win with Pfizer going higher, and all that's to do is stay above $27, then we have no risk on this trade. Okay, there's no upside risk, so we get $50. If we hang out at the same price, we have a pin price around 26. We have a profit trap at 26 down to 25. We could make a couple $100 on the trade. It'd be $150. The downside is if I wanted to own the shares, I don't intend to lose on this trade. So if price fell to 24 or 23, I take the ownership, which my break-even price would be $24.50. I would sell a call, get a break-even price or better, and flip it for like $50 to $100 profit. Okay. So I'm doing that because do you see that an 85-day expiration is only expected to move $2.52? We have dollar strikes. It's not precise enough in the option chain to get us really a good trade on that expected move. To me, the safer trade is build something out, give us no upside risk. I think the stock goes higher, and we take the trade this way. So this is what I'm going to do. I'm going to take a new trade on Pfizer. It's in the pinch point. It's in the go zone. We're probably going to have direction coming sooner than later. I think the direction is coming to the upside. My pinch point scanner says it's going to the upside. So I'm going to build it out this way where I have no upside risk. This is a little bit more credit up front, okay? But I need price now to go about 75 cents. This requires price to only go nowhere. If price even falls 25 cents, we still have buffer. If price falls $1.25, we still have a buffer and a profit trap that makes us more money. So I'm going to take this trade. Okay. All right. So I'm going to try to get this thing. Let's see what we can get for 55 cents. As long as we get over 50 cents, I'll take the trade. So this will be 78. That one's 7854. Okay. So 7854. This is one of my IRA accounts. So I'm going to take this one here. And it's going to tie up. So 27 by 26 by 20. And again, risk on, so it shows defined risk. I'm not really worried about that risk because I'd rather own the shares. I don't mind exercising and owning the shares. If it's below 24.50, I'll own the shares. Most likely, I would imagine it's going to go higher. We'll have no upside risk, and we'll just grab 55 bucks on the trade or 50 bucks on the trade. Let me see if this will fill for 55. Okay, 55 not filling, 54, 53. As long as it fills for over 50 cents, I'm taking the trade. Or at 50 cents, I guess, which is below the mid price, which I hate getting filled below the mid price. $0.50, not filling. 49, come on. All right, I did this trade on Intel for like 63 cents. We did it on a Micron for 25 to 45 cents. All right, come on, man. This is ridiculous. 45. All right, I'm in for 45. So the likely profit on that trade for Pfizer is $45 per contract. Okay. The backup plan is if price falls, I will own at least 100 shares. Okay. And I'll repair it. And I don't intend to lose on the stock. So it's a little bit different than our traditional kind of directional play. But again, this is what I assess in pinch point alerts is out this time, 85 days, the expected move is only $2.50. I don't have the precision in the strikes to make this worth my time to trade it for just a pure directional standpoint. But I do like Pfizer. I think there's upside potential. And I'm going to exploit that with a trade that has no upside risk. We grab 45 bucks a contract. We can repair it if it goes against us. I'm okay with that. And the most it would tie up if I own the shares would be break even 24.49, or I guess less than that now. So let's go. I got filled for 45 cents. So 26 minus $1.45, 24.55. So if I'm in a cash account or an IRA account, the most it's going to tie up for 100 shares is 24.50. If I can repair that for 100 bucks, it's fine. It's 5% return. You know, so I'm willing to have that as like a backup plan to make this a winner. So anyway, I know that's a long-winded way. It's usually not this complicated, but the fact that it's in my pinch point scanner, I like what it is trade-wise. I think that we end up going higher. I think we end up pushing up to like $28, $29, and we have no upside risk, and we'll just make 45 bucks per contract, which I'm fine with that. Okay. All right. $20 put for 54 cents, willing to own at 1946. Yep, I know. Crazy, right? This pre-IPO stuff can backfire. Yeah, I know. I mean, I told everyone yesterday it's going to be risk capital. Like, I'm going to throw 600 bucks at it and see what happens. So I'm literally like, if we get out where this thing like pumps and halts and pumps and halts, if we hit $1,000, like I'm getting out. So it can be, you know, on the upside, it can be just as good, but I realize like it could pull all the way back to flat. And, you know, if I'm maximum risk is $1,000. If they go to zero, it's like, I don't think they're going to zero. It's clearly drawing some headlines and attention. I'm going to see if this just keeps getting pumped and pumped and pumped. The crazy part is to see it move like that. There's no options. There's no options on VCX. So you just have to buy the shares, but it is ripping like crazy. So we'll see. All right. Anyway, let me get this in for pinch point. I'll add a new trade in. It's going to be trade number 116. And I'll just keep an eye on my time since I have to go in just a few minutes. I haven't gotten a rental car yet. I haven't packed. I've got to do that in like 20 minutes. All right. Trade number 116. Pfizer. Today is the 25th. We went out to the June 18th expiration. And I buy the 21 or the 20. I got filled at the 20. Broken Wing Butterfly. I'm going to put in here willing to own and repair as well. Willing to own and repair if needed, but no upside risk. Okay, that trade's in. Let me post that in Telegram for my pinch point alerts. Trade number 116. No upside risk if price is greater than 27. It's currently trading at 27.25. I'm willing to own if price falls less than 26. Break even on this setup is 24. What is it? 24.55? Yeah, 24.55. And I'll repair with covered calls for, I'd say, $50 to $100 income or better. Okay, that is, like I said, that is not a typical trade we take in pinch point, but given what the stock is, I think it's a stock that I'd rather own it, repair it, not allow it to become a loser because we're not going to get a lot of direction. Now, elsewhere, looking at pinch point, I've got a trade on Intel, got a trade on Pfizer. We took a trade on HPQ. Let me see this one because I might give it another stab. Fudge you. This is what we needed last week, damn it. HPQ, we needed this. The 20th, it's like we couldn't get that. We literally had a 19 call, 18 put, and this would be break even right now. Son of a gun. Well, we're getting direction. Gosh. Let me see. I don't know. Let's look at like a bull put spread or a debit spread. Let me see. HPQ. We're getting a breakout. That's encouraging. Let's see what we can get here. If I went out to May, buy the 19, sell the 20. Even this isn't too bad. Buy the 19, sell the 21. You know, I get almost 100% return on that trade if I just do a debit spread. That's not terrible. That's one way to play it. If I went 20 by 19, I get 35 cents. I'm risking 65. This one, I've got to go in the money to get more. I like the debit spread better. Okay, $1.40. I mean, we can make 100% on this trade. I'm going to take this one for HPQ and give another trade. We get 100% profit opportunity. Let's see if we can get it. So let me get in here for $1.45. We're going out 51 days. See if we can get price to get up to $22. So $1.45. Max risk is $1.45. Filled for $1.45. Max profit would be $3 credit. Let me go after. Let's see. So 217 would be our mechanical profit at 50% return. We could go after. I'm going to try to go after $100. That'll ease the pain from the HPQ loss we had. That'll cut it in half. We've had winners. We had like 3 winners in the last 2 weeks. So I'm going to go for 245 on this trade. So HPQ, I'm going round 2. This is pinch. And I'm going to go after a close at 245 and make $100. Okay. New trade. We're giving another setup. New trade. HPQ is now moving. So I'm doing a HPQ 515 expiration. Buy the 19, sell the 22. Okay, trades in. So it's a 5:15 expiration. Okay, trades in. Yeah, that's annoying. I mean, again, even if we had the expiration out to this Friday, it might be like a break even trade, but obviously that's better than taking a loss like we did on Friday. So it is what it is. But the good thing is it's still pinched. It's now breaking out. I'm going to take it to the upside, see if we can get filled for a dollar contract and make a winner out of that. So looking good. Let me set a chart alarm here at 22 because that way we should be hitting our profit target. If we're at 21.50 to 22 bucks, we should probably hit that profit target. Okay, price is right back to center on daily profit play. We're probably looking pretty good on both of those, by the way. I'm going to put a pin in the pinch point stuff for right now. I will go through. So, like I said, I know I'm traveling today, but I will be pricing these out through the rest of the week. The good thing is these are not crazy time sensitive. So, if we take a look at these, tomorrow and Friday, what I'll probably end up doing is just doing a separate video for all pinch point members. And hey, look, just here are my trades. I'll literally probably power through like 20, 30 minutes and try to price out as many of these as I can, and we'll see what trades stick. Cool. So if you're enjoying that for Pinch Point Scanner, Deanna, we're going to play a little session today. If you want to join me, I'll have the alerts updated by the end of this week. I'll look at pricing out all 31 of my go zones, and I do want to take a look at some get sets as well. Some of these are pretty household names. If you go get set in the S&P, we still have 18 stocks in the S&P that are in the get sets. I want to see how long they've been consolidating. These are big names. And I still think also these big names are going to deal with some rotation. So I'd probably go after a bit more volatile ones like, Oracle, AMD. But I mean, I think money is just rotating out of these so hard this year. Anyway, but they're still good as long as they're, let's say, 3-4 weeks consolidated. I think they're fair because if we give this thing like 60 days, if it stays sideways, it's going to go from a get set to a go, which makes it even more likely to move directionally. So all this is good, and I'll try to price these out. So between my all stock 31, we'll play with these and see how many we can find, and then my get sets in the S&P or the Nasdaq. Nasdaq because of maybe a bit more volatility depending on what these look like. But between these, I'll try to find a couple more if they look like they're ready to just hang out a little bit longer, pressure cooker, get into the go zone maybe in the next like 2 to 3 weeks. Okay. All right, Deanna, we ready to fire up some pinch point? Yep, you got the screen here. Awesome. So I'm gonna hang out. I'm gonna go pack up, get my rental car, brace myself for traveling across the country with a 1-year-old solo. Is that true? No, I know. Yeah, but it's the 4.5 hour flight that's probably going to be the added piece to that. I'm not worried about the drive necessarily. Carter loves the car. I'm just thinking like the flight is always like the see if he'll sleep. If not, trying to avoid the screen time, lots of snacks, lots of walking up and down the aisles, and we'll survive. We'll survive it. He's fine. It's just, will I survive it? Just kidding. All right. Yeah. Hmm. Is that an airplane trick or is that like like all purpose trick? And cars. Okay. Gotcha. I usually just take his pacifier and just like rigorously like put it so he has it in his mouth like you make his teeth squeak. So anyway, my fiance's been handling most of the flights that we've been on with him and just keep him entertained. But whatever, we'll survive. It'll be fine. So all right, everybody. Benadryl, come on, man. That's mean. Uh all right, I'll see you later today. I'll still be back live tomorrow. I'll just be coming to you from my family's place in Winston-Salem. And Carter might make an appearance on Thursday, Friday. So, all right, thanks. Check out some Pinch Point. We'll get some video updates on there this week. Let's keep an eye on daily profit play today. So far, looking pretty centered, and chart alarms are set. So I'll kind of keep an eye on things as I can. All right, thanks. We'll see you soon. Thanks, Deanna.